One of the more challenging aspects of an international assignment is understanding your tax burden and how your employer helps to offset those taxes. One common approach is called Tax Equalization, TEQ. The goal of tax equalization is to ensure you pay no more or less income tax during your assignment as if you worked and lived at home. Tax equalization is an accepted industry approach to calculating net incremental taxes. The approach is documented in formal company policies, but is not a government tax legislation. Your employer's TEQ policy will outline what income, both assignment-related and personal spousal income, they will equalize, as well as any caps or limitations on how much personal income will be equalized for host tax exposure. The policy is meant to address the handling of any net incremental home and host country taxes on taxable assignment-related benefits. Example, housing allowance, hardship allowance, relocation allowance, and company-sponsored income, for example, salary and bonus. TEQ is most often seen with long-term assignments, but can apply to other assignment types as well. The process starts with hypothetical tax. While on assignment, you will be placed on hypothetical tax via your home country payroll. This is an estimated income tax deduction based on company-sourced income and sometimes personal income. The hypothetical tax deduction amount is communicated to payroll and represents what you would have been assessed as a tax resident of your home country. Your home country payroll department will be instructed to shut off or reduce actual income taxes being deducted in lieu of the hypothetical tax deduction. While you are on hypothetical tax, your employer will assume responsibility for paying your actual home and host country taxes. This is to ensure that both you and your employer are still in compliance with home and host income and payroll tax regulations. At the end of the tax year, with the assistance of the company-designated expatriate tax provider, your actual tax obligation on company-sourced income and any personal income covered by the TEQ policy is reconciled against your hypothetical tax contributions. You will then settle any windfalls or shortfalls directly with your employer. Here are some to-dos. Keep receipts to justify expenses, deductions, and tax payments. Notify your employer of any changes to family status or life events. Notify your employer or expatriate tax provider if you exercise any stock options. Discuss any personal and/or spousal income with your expatriate tax provider, and most importantly, read the fine print of your policy for any limitations or caps on the amount of personal and/or spousal income. We hope this brief tutorial video will help you to better understand tax equalization. Here at HYPOTHETICAL, we understand that your compensation is critically important and that taxes can be complicated. For more information, contact your HYPOTHETICAL Mobility Counselor. For any specific questions in regards to your tax equalization calculation, please contact your company's designated expatriate tax provider. Thank you and best wishes for a successful assignment.